Should you buy a home in 2026? Most Canadians really just have three housing options. 1, live with parents, 2, rent, or 3, buy. But here's the truth that most people miss. The best time to buy isn't about the market, it's about your season of life. It's when you realize that your circumstances have changed and buying a home is conducive to your lifestyle. So let's break down the 3 options. Option 1, living with parents. Living with parents is often a temporary financial strategy. It works well if you're early on in your career, paying down debt, or aggressively saving for a down payment. The upside is obvious. You've got a lower monthly cost that allows you to save faster. The downside, however, is limited independence. It usually doesn't align once you're starting a family, moving in with a partner, or simply just wanting your own space. So for many, living with parents is a season, not the destination. That being said, living with parents can be a smart financial move, but eventually, most people want their own place. So option number 2, renting. Renting works when flexibility matters. Maybe you're unsure which neighborhood you want long-term, or your career is still evolving, or maybe you're not sure even which city you'll settle in. So here are some of the benefits of renting. You have lower initial costs, you don't handle repairs, it's easy to relocate if you decide you want to move. For example, the space doesn't suit you anymore, or maybe you get a new job in a different city, or whatever the reason is, you have more flexibility when making that decision. We've seen this time and time again. The long-term cost of renting often exceeds short-term savings. So to sum it up, yes, renting can be convenient, but it's not a long-term wealth strategy. Option number 3, buying. Buying usually becomes the right move when your circumstances shift. For example, maybe you're starting a family. Maybe you want access to better schools or a stronger community. A common one is you decide to move in with a partner. Or maybe your kids are growing up and you just need less space. Sometimes it's also career-driven, a promotion, a new job, a relocation. And of course, you have to look at affordability. You have to assess your current financial picture and long-term financial goals. So ask yourself these questions. Number 1, how stable is my income over the next few years? How's my job security? Is my pay variable? Am I self-employed? Am I on commission? Or do I have plans to career change anytime in the future? Number 2, what's my monthly budget? What monthly payment actually feels comfortable, not what I qualify for? Mortgage approval and real-life affordability are different. What I mean is you have to ask yourself, if my payment was this amount every month, would I still financially feel comfortable? Or would I have to, or would I be willing to make changes in my lifestyle? A home should support your life, not totally consume it. Number 3, what will my total housing costs be, not just the mortgage? So there are property taxes, home insurance, utilities, strata or condo fees, maintenance and repairs. You have to plan for housing costs as a complete package, not just the mortgage payment itself. Number 4, how will this payment feel if interest rates change at renewal? Because even if you take a fixed rate today, eventually you'll renew. So you have to know, could I handle a higher payment in the future if rates rise? Number 5, how much have I saved for down payment and closing costs? This is important because beyond the down payment, you'll also need funds for legal fees, property transfer tax, property tax adjustments, home inspection, moving costs, and an emergency buffer after closing. Number 6, do I have an emergency fund after I buy? Know that home ownership does come with surprises. So appliances break, roofs age, things need to be fixed or replaced. So you have to aim to keep savings available after closing. And last but not least, how long do I plan to stay? Buying usually makes more sense if you'll stay at least 7 to 10 years. And here's why. Buying a home comes with upfront and exit costs. So when you purchase, you pay closing costs like legal fees, inspections, land transfer tax, and moving expenses. So when you sell, there's also realtor fees, potential mortgage penalties, and moving costs again. So if you only stay in a home for a short period, those costs can outweigh the equity you've built, even if the property increases in value. But when you stay long-term, several things happen. More of your mortgage payment goes toward the principal instead of interest. So over time, you build real ownership in the property as your equity grows. 2, you give the market time to work in your favor. Real estate is cyclical, so longer holding periods reduce the risk of needing to sell during a market dip. Number 3, you spread transaction costs over many years, which makes the purchase financially worthwhile. Number 4, you gain lifestyle stability, so no forced moves, consistent community, and long-term school planning if you have children. Number 5, you create flexibility. So after a few years, you may have enough equity to refinance, upgrade, or maybe even convert the home into a rental. A simple way to think about it: if you see this home as a short stop, renting may make more sense. If you see it as part of your longer journey, buying usually becomes the stronger financial and lifestyle decision. Okay, so that is a lot to think about, right? It is one of the biggest financial decisions of your life, so that's fair. But let's sum everything up. If you're skeptical to buy a home, you're probably thinking large upfront costs, higher monthly commitment, responsibility for maintenance and repairs, less flexibility to move, exposure to market fluctuations. There's a mortgage renewal and interest rate uncertainty. It can also slow progress on other financial goals. And of course, the emotional pressure of long-term debt. But here's the biggest benefit of owning a home. Every mortgage payment builds equity in something that you own. You get stability. You're not worried about a landlord selling the property. And over time, home ownership is still one of the most effective and tax-efficient ways Canadians build wealth. Here's what you need to know in 2026 specifically. Inventory is way up, meaning more negotiating power for buyers. Mortgage rates are stable. Home prices are mostly flat, and buyers aren't facing the extreme bidding wars of the past. So that means if your season of life says it's time, the market is giving prepared buyers a fair opportunity. So here's the real answer. Should you buy a home in 2026? If you're still saving, living with parents can accelerate that path. If you need short-term flexibility, renting works, but with less security. If your life circumstances calls for stability, buying is usually the long-term win. In the end, most people eventually choose between paying their own mortgage or paying someone else's. I'd love to know which situation you're currently in, so please let me know in the comments. And if you found this video helpful, hit the like and subscribe button. I'm Evangeline, mortgage broker and partner at All Trust Mortgage Solutions here in Greater Vancouver. Our mission is simple. We're here to educate and guide you so you can make confident, informed decisions on your path to home ownership and long-term financial growth. So if you made it this far and you're curious to see what people say about us, I'll link our Google reviews right below in the comments. Thanks for watching, and until next time.